Hey guys, Josh with Pat McKinnon Realtors here with my buddy Jim Butts, Crown Mortgage. We were just chatting and figured out that there's a lot of misconceptions about real estate. So we're just here to educate the general public, our neighborhood, Laurel Springs, and talking about some...
I love Laurel Springs, man.
So do I.
It's so great.
Yeah, it's great...
It's funny because I never thought that you and I would be sitting down talking about Laurel Springs. You know what I mean? I never would have guessed that. And I have this weird obsession with Laurel Springs growing up. Like, it's just... I talk about it to people and they're like, dude, that's not... You're weird when you talk about that. I'm like, no, it's my hometown. That's how it is. And you try to explain to them what Laurel Springs is.
Yeah.
And what, because it's like, it's not Lindenwold.
Yeah.
It's not Clementon.
No.
It's not Stratford.
Nope.
It's totally different.
Completely.
There's a little bit of like Mayberry, Huckleberry, hip kind of thing to it. It's like
kids with sticks running around.
Yeah, yeah. It is almost, it's not totally back in the dark ages or anything like that, but there is an old school feeling to Laurel Springs that I don't get when I go to Clementon.
Absolutely.
Those kind of places.
I totally agree. And it's funny because we were supposed to start a half hour ago and we just started talking about Laurel Springs and, we're finally like, oh man, we got a meeting, we got to go. So yeah, it's such a great community. And that's why, Jim and I decided to sit down, just talk about, real estate, local real estate, whether or not you're looking to buy or sell a home, doesn't matter. We just thought it was important to educate, really, our neighbors about the market and where we're at and some common misconceptions.
There's so much misinformation out there, and I think part of it has to do with the ancient hierarchy of buying real estate.
I completely agree.
Your mom and dad were always the ones that told you what to do, and now there's so much stuff that's going on in the real estate market in the past 20 or 30 years that the laws that were applicable in 1983 that were taught to them by their parents that were buying real estate in 1950 are not at all what is now. And it's not a dig on anybody's mom or dad. We do mom jokes all the time. But it's not saying that your parents are stupid or they don't know what they're doing or they made bad investments or anything like that. It's just saying that the rules that applied when they were kids do not apply now. And just from the basic thing of like life expectancy.
Yep.
And parental roles and your need used to be to provide to your kids when you passed away now has shifted to how can you live to be 85 or 90 and not be a burden on your kids. It's a total different conversation all the way around. First time home buyers, they had to wait and save and save and save and save until they had 20% or 30% to even think about getting approved. And now there's 20 different programs you could do.
Well, the world has changed.
Yeah.
The world has changed. Just the world in general. America, politics, everything has changed. And, going back to, the, background where our parents grew up and, they were educated by their parents. They were able to buy a home for $78,000, and a nickel. That nickel got them the deal. That we're not in that market anymore.
Sure.
There's a lot more government programs that are available, state programs that are available. And with those, the real estate market has just completely transformed. And to reiterate, there are a lot of misconceptions that, our parents have told us, you have to do this or you have to do that before you can buy a house. And, that is one large objection that I get from, my first time home buyers is, oh, well, I have to do this. And I ask them, who told you that? They're like, well, it's just known.
Yeah, right.
It's just known, right? So yeah, I think that's really why Jim and I decided to come together. We were just chatting and, we want to educate about like where we are at currently in real estate, in the world, as far as real estate goes. Because that 20% myth that you touched on, that's a really big one.
Yeah.
A lot of people think that you need to put 20% down to buy a house. If you wait until you have 20% down, you could be waiting forever. So I think that's a good topic to talk about today.
Yeah. I love the first-time home buyers. You know, that's if I could do nothing but those loans for the rest of my life, I would do that for sure.
They're the happiest people. They're the happiest people
for sure.
You know, getting that key, you know, that is such a joy.
Yeah, and I actually feel like I'm doing a job.
Yeah.
You know what I mean?
Absolutely.
Don't get me wrong, I'll take all the refinances in the world, I'll take all the stuff. But when you get to work with somebody and they have a concept or a dream or an idea or a hope, and you can turn that into an actual place of shelter where they can build a home and they can have the memories that like I have in Laurel Springs, you know? Like somebody taught my mom how to buy a house, and that begot all those other memories to go through. So that's a huge undertaking. I take that really seriously. Like, I really want someone to understand what they're getting into. Yes, it's how I make a living. Yes, it's how I pay my bills and feed my family. But I don't want to exploit people for profit. I don't want to misinform people. And really, the worst thing that you can do is misinform or you know, a lie by omission or whatever out there chasing a check and getting people to make purchases that they're not fully educated about. I'm totally okay with someone saying, I don't want to buy this house now that I understand what you said. I would way rather that than have them call me 3 months after they close and go, I had no idea that there's a sewer bill and a water bill and all these other bills that are involved in this. I just thought I had to pay that little bit of money, and now that there's another $600 in bills, that kind of stuff is happens. I
think that's a really, you know, great point to make. You know, it's our job as professionals to educate our clients. You know, this isn't what they do full time. This is what we do full time. So even, you know, taking a first time home buyer, you know, if we're looking at homes, I'm going to give them an analysis of what that home is worth. You know, I want them to make a sound financial, you know, decision. You know, they may love the home, but if the comps aren't there, or if, you know, there's astronomical tax, you know, for that property that's going to price them out, I do not want them to purchase that home.
Right.
You know, it's our job, just as you said, to educate, you know, this is what it takes. This is, you know, what goes with buying a home. This is what your bill is going to be. You know, I think that's a really big one is, you know, the pre-approval. Someone may be pre-approved for X amount of dollars, but is that really what they can and want to afford?
Sure. That's a big thing with first-time home buyers. Like, someone says, I want you to get me pre-approved.
Yeah.
And I always go through, I've been doing it for a long time, so I got the same stupid spiel I do all the time. Like, you know, I can tell you what you're pre-approved for, but I can't tell you what you're comfortable spending.
Exactly.
You know, some people like to have a really nice house and eat ramen noodles and bologna sandwiches.
Yeah.
Other people like to live moderately.
Go on vacation.
Go on vacation and buy clothes and stuff like that. Like, I can't tell you what you're comfortable paying. So if you tell me, here's what I pay right now for rent, here's what we have, there's a process that goes through. And for instance, if you're paying $1,400 a month rent right now and you have $3,000 saved and you want a mortgage of $2,600, I'm going to have to understand where that extra $1,200 is coming from and why you don't have $60,000 saved then, because you apparently have $1,200 extra to go through. And people don't talk like that. People don't say, oh, well, no, I don't want to do that. Or just walk them down the road of this is what you're taking on.
Yeah.
Because there's a lot of people in this business, realtors and mortgage, that go, oh, that's a $300,000 deal.
Yeah.
I don't want to walk away from that check. Where, you know, I'm just not that, I'm not built that way. I want to make sure you understand everything. And I've said it a million times. Hey, listen, if you were my sister or if you were my cousin, I would tell you I wouldn't do this if I were you. You can still do it. It's all good. But I want to make sure I explain it to you so that, God forbid, something goes wrong down the line, I want to be able to put my head on the pillow and sleep at night and know that I educated you what the ramifications were and you chose to do it anyway. Cool. High five. We'll go to closing. We'll do whatever. But I don't ever want someone to call me and go, why didn't you explain this? I didn't know. What's the thing with this? So I love the education stuff.
And I think that's where, you know, the relationship with the real estate agent and the lender really comes in hand as well. You know, if we are working on the same page and we have the same understanding for our same client, you know, then that's going to give them more of a sense of, you know, comfort and a sense of, you know, I have two different entities, two different people that are working together to help me buy a home that is within my budget, in the right neighborhood, under the right terms, that's crucial, especially for a first-time home buyer.
Yeah. I've been doing it for 20 years, and I believe that there's a social responsibility that we have to people. And I've lived through a couple different up markets and down markets and things. And 2005, 6, 7, and 8 were specifically brought on by greed. And greed of salespeople, whether it was loan officers or bank executives, whatever it was. But no one was educating people on what they were taking in. No one was letting them know the holes that they could be creating in their life. So, like I said, I know a ton of people that made a lot more money than I did in the business, but I don't know anybody that slept better than I did. And that's what it's all about. I got to answer to whatever I believe in and my ideals and my values, and it's really good to work with people that are like that. I don't work with people that are just chasing paychecks. It doesn't work for me. I don't want that. There's enough people out there that'll do that. I really want satisfied customers, and I'm kind of hokey or whatever the word is. I was born and raised in South Jersey. I'm probably not leaving South Jersey. I go to Laurel Springs, to my roots all the time. I'm known around there. I don't want to walk into a place and have to worry about 5 people that are pissed off at me because they're behind on their mortgage that I didn't get them through. I care about that. I know I'm probably gonna, I don't know for sure, but I'm probably gonna die somewhere within 20 square miles of Laurel Springs. You know what I mean? I don't want to have that. My kids, my name, my reputation means a lot to me. People don't take it as serious as they used to. But I don't have a common last name. So when people say Butts, they know it's me. I don't want people saying that's the line. That's the dude that's like the used car salesman of mortgages. Oh, that's the guy who screwed my uncle over when we were doing this. Because that's really the world we live in. Especially now with the transparent society that it is and Yelp reviews and all that other stuff. I want to make sure everyone knows exactly what they're getting into when they get there,
And I mean, you touched on a couple points in there. 2008. I think we should definitely talk about that on a different.
Yeah, we're going to do a bunch of these. So
on a different one.
We'll catch them one right at a time.
Waiting for that market to crash. Definitely, a topic for a different show. But I couldn't agree with you more. I think your reputation, which is why I'm very happy to sit down with you. Your reputation is great, especially in the Laurel Springs area. And what I found is a lot of people do come into the real estate business for that, fat paycheck, which, you got to work. You got to work for it. You have to build that reputation. And that's why I think having, really choosing the professionals that you work with for your loan, for your real estate needs, to help you find a home, an agent, working with full-time, agent on both sides, lending and, as a real estate agent is so important. Working with a full-time agent, you got to think about, are they going to be available? Are they really have my needs in first and foremost, frontier?
Yep. And it's crazy. You were talking about the 20% and whether or not to put down 20%. And I always joke around and say, like, the worst time to buy real estate is 3 years from now. That's the truth. The best time to buy real estate was probably 6 months ago.
It's
or
a
year ago or whatever. It's a funny thing, but I guarantee you, anybody that didn't buy a house, that wanted to buy a house a year ago and decided not to, is kicking themselves right now.
100%. It's that cliche. The best time to buy a house is right now. But it is true.
There's never a bad time to buy real estate. And that's truth. And I go by facts. You know what I mean? So if you look at numbers, and this is a fact, and anyone can research this if they want to, if you take a data point of 10 years, 1972 to 1982, 1965 to 1975, 2002 to 2012. There is not a 10-year data point set where real estate depreciated.
No.
You'll never find it. There isn't one. Real estate always appreciates. If you look at a small segment of maybe 6 months or a year, sure, there are times where real estate does depreciate. There are times when it goes down, but
it's the ebb and flow.
it's how it works.
The ebb and flow.
But if you look at the big numbers, it always appreciates.
Absolutely.
You look at millionaires and billionaires, they all make money on real estate. I know that there are certain famous people that say renting is the way to go. The interest on rent is 1,000%.
Yeah.
I would love for people to, some people to keep renting because I have rental properties. I know a lot of people that do. So I'm not, if you want to rent, that's fine. But I will just tell you that it's like throwing money out the window.
It is.
The best retirement plan that you can have is buying a primary residence and either paying it off or finding out how to leverage the equity that you have in the property to acquire more assets to move forward. That's the way it works. You get tons of tax breaks. There's 5 hours of content we could do about that, but I can guarantee you right now, waiting to buy a house, if you can buy a house, if you're able to buy a house, waiting to buy a house is not a good idea.
But going back to that, like, what does it take to buy a house? I mean, say I am a first-time home buyer, and, I'm just thinking about buying a property. What does it take? I mean, how much should I have saved?
So the difference, again, between getting qualified and being comfortable are two totally different things. There's a couple different comfort factors that I look at. When I'm just talking about my personal ethics and morals when I'm talking to somebody.
Yeah.
If somebody's paying $2,900 a month for rent and they're consistently paying $2,900 a month for rent, they can afford a $2,900 mortgage payment.
Yeah.
I can see that. I know that's how it is. So if I get them a house, I don't feel like I'm getting them in over their head. They're paying that much. They can do it. They can move forward with it. That person really doesn't need that much if they have half decent credit.
Yeah.
That's the reality of it. If you really go through and combine A, B, C, and D, we can do a first-time homebuyers grant where you get either $10,000 or $17,000 in assistance. You can get seller assist that goes behind it. You can literally go into a purchase with putting $1,000 down in your deposit and getting the $1,000 back at closing and literally taking nothing out of pocket. That's for certain individuals. If they can do that, they absolutely can qualify. I do transactions all the time where people either put little to nothing out of pocket. Doesn't mean that's the loan for everybody. Doesn't mean everybody qualifies for it. But if you're financially responsible and you have the wherewithal from your current employer, you can literally buy a house with next to nothing out of pocket.
Yeah.
For sure.
I mean, I think that goes back to, the time of old, that our parents, bought homes and are, guiding us. And we, of course, love our parents. But, there's so many different programs that are available out there. The 10,000 first-time home buyer, the additional 7,000 depending on where you live. If your parents have never bought a home, like there's so many different programs out there. That's why it's important to work with a lender that is fluent in all the different programs. But buying a home right now versus not buying a home and waiting.
Yeah. So there's a couple different things. The basic thought process is that rates are going down. That's what everybody says. That's not me. That's what they told us. Fed cuts, blah, 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 blah. If rates go down, from a basic economic standpoint, rates go down, demand goes up, pricing goes up. That's the way it works. If supply and demand, basic economics. So I would say if you really believe that rates are going to go down, I would buy yesterday. And then when rates go down, refinance. That way you've locked in your purchase price. You've locked in your equity point. And when the rates go down, you can refinance and enjoy that lower payment. But if you wait 8 months for rates to go down, you're now going to fight with 17 people that also want to buy a house for lower rates. And the price is going to go up and you're going to wind up paying way more than you would have if you would have bought it yesterday.
I think a really big thing is if you're thinking about, all the objections of why you want to wait. I want to wait for, interest to go down. I want to wait for a crash. You're not the only one having that same thought. there's bound to be other people having that same thought.
Yep.
So what happens when interest goes down?
Yep.
Which it's not even that high historically now. What we're at 6.25 right now.
It's a little higher than that, depending on the credit score. The 6.25 is like the 1995 break job rate. You know what I mean? Like nobody qualifies for it, but they'll advertise it out.
Yeah.
But even in the sevens, is not really that high.
Yeah.
We do got to take a break because we're going to hit our 20-minute mark, and we're going to come back and finish up the rest of that question because I don't want to zot it out.
All right, and we're back.
Yep. So I just wanted to explain that thing with the teaser rates because it's a real popular thing for banks to put out there. And when you go on any, Wall Street Journal, whatever, you'll see advertisement for mortgages, right? Yeah. If you read the fine print, what that advertisement on the mortgage says is that's the best possible rate that they could offer to a client today.
Yep.
So that's based upon an 800 credit score, 40% equity, and stable job history.
I mean, that's even. I mean, who hasn't received a letter from Discover with a 2% interest rate for a credit card?
It's a lost leader. It's what a lot of places do. Don't get me wrong, I'm an advertising major. I went to school for advertising and marketing. That's a beautiful thing to do because what you want to do is get people to click or apply or do whatever and go, hey, guess what? You don't qualify for that. What they don't tell you is like 0.03% of the country qualifies for that. But we'll give you this. And this isn't really that bad. And it's like, that's why car dealerships want to get you to test drive the car. Because they want to get you emotionally invested in the transaction, then tell you, well, this is what you really get.
Yeah.
And that's a common thing for the mortgage industry. It's a common thing for every advertising industry. Get you interested and then tell you, well, it's not really that, but it's not that far off. I mean, rates are, like I said, I've been doing this for 20 years. Rates were 7.5%, 8%. My first couple years in the mortgage industry, I was taking people out of 9 and 10% FHA loans and giving them 6.5%, and they thought I was the greatest thing ever. We got this recency bias with these rates. I was talking to someone that I know, and he was like, I'm waiting for rates to go down. And I was like, listen, just so you know, I've been doing this for 21 years, which is like this many days. You know what I mean? 365 times 20, 8,000 days, something crazy like that, right? So the number of days in that time that I could give somebody a rate that started with a 3 is like 120 days. Like it just doesn't happen. It was an anomaly. It was COVID. It was all these things, blah, blah, blah.
I mean, it was a pandemic.
Yeah.
It was a pandemic that we went through.
Yeah.
They
and the
had
other
to
time,
drop it.
the other time was when the markets all collapsed.
Exactly.
For like 3 days, there was a time I could do 3.875 on a 15-year note. But it's not common.
Yeah.
Do I think rates will get back down in the 5s? Probably.
Yeah.
But if you think about it from a business standpoint, banks, it's not a successful business model to lend money for 30 years at 3.5%.
Nope.
I don't know why banks even did it. I thought there were going to be banks that pulled out of the business for a while because it just doesn't make sense.
Yeah.
If I owned a bank when rates were at 3.5%, I would have said, I'm going to hang out for a little bit. I'm going to let everybody else lend their money out at 3.5%. I'm just going to wait until it goes back up to 5 because why would I commit to giving you this money for 30 years when I only make that much? Forget it.
Exactly.
Like you could probably work at McDonald's and make more money than you would in interest on that loan. So I understand that's the way things went. I think they'll get back down. I don't know for sure. I don't control anything. But I think in the 5s, in the low 5s, probably is where, if you listen to the guys that are at least selected as the really smart guys, Barry Habib and all these other mortgage people, they say rates are going to probably be back down in the 5s. And that makes sense.
Yeah.
That's something that's feasible for people. But we
don't know when.
We don't know when. And
we don't know when.
The other thing you have to understand is, and you touched on it, you're not the only one that's waiting for that.
Exactly.
There's literally probably, I don't know what the number is, 15 to 20% of the whole entire country. 15 to 20% of people that have astronomical equity in their property that are dying to sell that just can't accept a 7% interest rate. But if they get 5, they're absolutely selling. It's going to be Wild Wild West again. It's going to be 22 people at open houses.
I'm working with a client right now who has to sell their home, right? And they want to move. They have to right size, not necessarily downsize or upsize. It's right size because their family grew, so they need a bigger home. So they're going to sell their existing home where they have a ton of equity in it. They have a lot of equity. They owe very little on it. And they're going to take a mortgage for their next home. They're going to use the money that they earned from the sale of their house, put it towards their new home, but they're going to wait until interest drops to do that.
Yeah.
They want to wait until it drops. And, at this point, we can wait, but that perfect home, that they come across on either Zillow, Trulia, or I send them, obviously, that perfect home isn't going to be available then. And then
No.
it's going to go up in price.
And not just that, like I think what people really don't do is they don't really look at numbers. I'm a big fan of numbers. I'm a big fan of facts. You look at it and say, okay, if I buy that house for $300,000 now and I pay $7.5 instead of $5.5, what's that cost me every month?
Yeah.
$150, $160? Don't get me wrong, $160 is a lot of money. I am very frugal. Some call me cheap. I am super frugal. We could do a whole episode on that. But so I don't want to downplay $160. But if you spend $160 for 9 months and you think rates are going to go down, let's just round it up to $200. You spend $1,800. Yeah. Right? I guarantee you the likelihood that the property that you want will be going up $18,000, not $1,800. You will lose 1,000% on what you would have had there.
Especially,
so you got to look at what it really costs you. And actually, if you buy a house, you don't have to make a payment for 2 months. So even if it's 9 months from now, you've only made 7 payments. It's so minute when it comes to that. It's not a long-term commitment.
Yeah.
The silly slogan of buy the house and date the rate is absolutely true. You're only going to be in that rate for a short period of time, no matter what happens. The average life of a loan is like 3.5 years.
Yeah.
It's a temporary thing. The house is the permanent thing.
Yeah.
The asset that you want to call home and you want to live in is the permanent thing. The financing structure around it goes up and goes down. People put additions on. They take equity loans. They go here. I've done mortgages 6 or 7 times for people in my career that, rates go up. They need to go this. They need to consolidate that. They need to go here. The financing part of it is such a temporary thing. Again, don't get in over your head. Don't buy a house that you can't afford.
Yeah.
But if you can afford it, locking in that equity piece now is super agreeable.
I think, it's kind of interesting, so working with a lender and an agent that, really understands your needs, imagine buying a home that you love, right? And say $2,000 is what your like max comfortability in paying is, right? You're locked in right now. You find a home, you're paying $2,000 a month for your mortgage, taxes, everything all included, right? $2,000 a month. And then imagine 6 months from now, you refinance for a lower interest, and then you're paying $1,750, $1,800.
No.
Think about the long-term savings
you're
going to have there.
Yeah.
You're within your, comfortability right now. Like, okay, I'm good with this $2,000 a month mortgage. I'm going to buy this home. Oh, wait.
It can only get better.
It can only get better.
It can only get better. You'll find out, oh wow, now I'm paying less.
Yeah.
You'll also find out, oh my gosh, I got that much equity in a year.
Yeah.
Because the demand will go up.
I'm sitting on $40,000.
Yeah. Wow, that's crazy.
Yeah.
And it can. That's what I tell people all the time. If you can stomach that right now, it can only get better.
Exactly.
It can only get better. It'll, at the very worst, that's what it'll be.
Exactly.
But you're in a fixed rate loan. There's no craziness going on. You don't have to worry about it. It might go less later. You might save money, blah, blah, blah. But right now, that's the most it's ever going to be.
Exactly.
If you ask me what's going to happen 6 months from now to prices, or I can't tell you. I don't really know. Who could go? And what the difference is, like if you look at it and see, if you paid $40,000 more for the house and had 4.5% for interest, your payment's probably going to be more, and not only that, you're going to owe more.
Exactly.
Like you can't get rid of a principal balance when you owe it. If you borrow $250, you owe $250. It's not like an interest rate. The interest rate goes up and down, and you can lock in for sure.
Yep. I think it's interesting too. Who knows where the market's going to be? 6 months from now. South Jersey, our area specifically, is a very interesting area. We are right outside of New York. We're right outside of Philadelphia. We have these two major hubs. We have Atlantic City, the shore, within an hour, drive. We're in a very interesting area just in the real estate market, spanning across the entire country. What we're seeing here in our neck of the woods is a little different than what we're seeing outside of New York, like directly outside of New York, what we're seeing in Florida or other hubs. And the reason for that is because we do have all these attractions so close, all these bigger cities so close. People are looking, people that work in Manhattan, for example. I was talking to another agent yesterday who we were just, shooting it and just having a conversation. People that work in Manhattan and say they live in Jersey, like right outside of Manhattan, but the Jersey side, it can take them an hour and a half to get into work for their commute. So they're waking up and they're like, let me go to South Jersey. Let me see what I can get down there.
Oh, yeah.
The home prices down here in their mind, right? Because it's not like right outside of New York. Our home prices are stupid cheap, right?
Compared to what they're used to.
Compared to what they're used to, because they're looking to buy like right outside of New York because I want to be close to work. Well, they're still close to work. It's a same commute, and that's where we're seeing a lot of the competition, come in. So the point of me saying that is, we see other areas like New York real estate is like going down a little bit. They're seeing a little bit of a dip, but we're actually seeing an increase because of that reason. People are leaving Philadelphia to go to Jersey. That was a big factor when I bought my home. We have the Patco. It takes me 20 minutes to get into Philadelphia if I want to on a train, and I don't have to drive. That's amazing.
I think that was another ramification of COVID. I think COVID taught the world, especially to the detriment of New York City, that you don't have to live in New York City to make New York City money and to have that lifestyle. There's been a mass exodus from New York City because people are paying $3.5 million for a brownstone. Or, right outside, I was in Brooklyn last year, and just out of giggles, I Zillowed where I was, and I'm looking up homes, and I'm like, that house is $2.8 million. That's a little 3-1 ranch that you would get in Somerdale for $250,000. So I think people started to see that geographically where you reside might not have as much of an effect on what you earn as what it was before. And now they're moving and they're looking for the suburb stuff. The Philly people don't want the shootings and they want parking spots and they want to go here and they're all coming to.
They want a yard.
Yeah.
They have a dog and they want a yard.
Yeah.
That's what it is.
Yeah, for sure.
Yeah.